Hi there, Serial Trader here. Let's have a look at the major US indices heading into this coming week. And alright, so since the last video, which was as of Thursday's close, our pivot that we were working here, which on the SPX cash index was at 2903.28. We came down, but we actually held. So it was a nice hard pivot. Didn't get stopped out based on that level. And I initially was working this 618 retracement of the initial move up, but we actually came down and did a deeper 786 retracement. But again, certainly a higher low. Held that nice ABC and then AC equality level that we were working off the bottom of the parallel trend channel, and then started bouncing up again and then consolidating again. So not a clear breakout, but certainly holding the established support and holding the stop level of the current long bias trade here. So that's still looking good. But there's actually more information to look at. Now, as far as short-term Elliott wave, still working that we have a completed fourth wave here, a small degree, and then now we'll be advancing in a small degree fifth. And then, it's kind of anyone's guess how far we'll go before we start making more significant peaks in, higher degree fifth waves. But it's not really important from the trading perspective that I'm working with here. More short-term in nature, of course. All right, so on the December futures contract, so this is the current front month E-mini S&P futures. So we comfortably made a higher low on the cash index, but on the futures, we still made a higher low. So I mentioned in the last video I was long some futures contracts overnight, and I had my stop just below the 29.0750 low. So at 29.0725 was my stop. We went as low overnight on Thursday before Friday's regular session. We went as low as 29.08. So the stop held just by a hair, but it held nonetheless. So I was quite happy to see that when I woke up, that didn't get stopped out. And now obviously we've been, we were advancing, but now this is Sunday night before Monday's regular open. Now we're advancing quite strongly, breaking out of this channel. So I like the idea that we now have on the futures here, as far as the wave count goes, I like the idea that we now have a hard low in place now that we've firmly tested and held that support level, held the stop level. Now we have a 1 up, a 2 down, and we're working our third wave to the upside, breaking out here nicely. Broke this initial resistance level on the futures, which was 29.32, and let's see, did we break this resistance level yet? 29.36. We've touched this resistance level, but I expect that to break right away here. And you can also see on the futures chart here as well, just a nice from the top. Oh, sorry, I'll get rid of these here. Didn't finish putting in those impulse labels. Okay, so from the top, we actually have a very nice looking ABC down, right? And clearly deep, almost double bottom. Just held it by, I think, less than 2 points there, but definitely held it. So nice three-wave decline, ABC down. That's for our wave 2. And you can also see, so I've done a relationship here already. So the distance of A projected off of the B termination point, that gave us an equality relationship of 29.0925 for C. We went as low as 29.08. So within a point and a quarter, we hit our equality relationship, while more importantly maintaining a higher low above 29.0750. So that was very technical, very nice. And now my futures positions are looking really good as of tonight's overnight action. So I expect further upside, and in fact, let me just quickly go here to the cash index, and then I'll go back and do the fib levels for the futures. So on SPX, we'll do our 1.382 and our 2.0 multiple there. And that would give us an upward target of 29.5528 for the 1.382 objective and 29.7854 for the 2.0 objective. So those are some upward levels to be looking for here on SPX. Let's get the scale reset here. Okay. Now on the futures, we'll do the same fib projection. So I'll do our reverse Fibonacci. Let's just nail this pivot here. Good. Okay. And the 1.32 on the futures gets us to 29.62. So roughly 30 points above where we're currently trading here overnight. That's a nice move. And the 2.0 objective, if we get a little more exuberant, which we certainly could, as this will be an all-time high breakout, that would get us to 29.8650. So that would be even better. So those are pretty big moves. If you're long even just a few futures contracts, that's thousands and thousands of dollars. And obviously the more contracts, the more magnified that's going to be. So that's looking good. Okay, let's reset the scale there as well. All right, now I think we're done with that. We'll go to the Thinkorswim candlestick chart. So on SPX, don't think we quite did a bullish engulfing candlestick. I'm looking at the candlestick close here, 29.14, so we'd have to close above that here. No, just 2 points. I should say 0.02 points below the level we need to have an engulfing. So not quite a bullish engulfing, and certainly a bit of an upper shadow. Although I wouldn't weigh that too heavily as far as weakness goes, because it was the end of the month and options expiration and all that. So that was just fairly typical end of the month BS, as they say. More importantly, we're still holding above the T line here, and all the moving averages are still in bullish alignment. And judging by where we are in the futures overnight and the overall elite wave count, obviously we're expecting a bullish resolution and further upside and a breakout to new all-time highs very shortly. But as far as actual candlestick signals, not technically a signal here, although there is one on the Dow, I believe, so I'll point that out here shortly. So on the Dow Jones Industrial Average, let's see here, we had some consolidation from the all-time high, which we just recently made. Now on Friday, we actually did a bullish engulfing candlestick. So the real body of Friday's candlestick engulfed the real body of Thursday's. So that's legitimate. That's a buy signal. And it closed above the T line. So that's looking good. And actually, if you look at some of the individual charts on various big industrial names, such as Cat and Boeing and some others, you can definitely see based on them how we're going to go on another run to the upside for the Dow. So I'm liking the industrials, looking good. All right, so we'll go to the Nasdaq Composite now. And Nasdaq Composite, let's see what we got going on here. Don't think it's technically a candlestick signal. It opened slightly too high for that to be the case. But very much showing the same kind of message as the Dow and the S&P. Looks like we're in a sideways position currently, but looking to resume our larger uptrend. So we didn't break any significant levels. Our previous higher low that we need to hold was this, which was 77.32 on the composite. Didn't get anywhere near testing that. And in fact, we didn't even quite test the 50-day simple moving average. Now we're back up above the 20-day simple moving average and back up above the T line. So despite there not being a specific candlestick buy signal, I'm certainly expecting the Nasdaq to go along for the ride to the upside here with the other two indices. But not particularly compelling as far as an actual Nasdaq base trade. Like if you want to play the Nasdaq 100 futures or something, just doesn't look as high confidence as the S&P, for instance, or even the Dow for that matter, if you want to play with Dow futures. I'm playing with the S&P, but totally a matter of personal choice. So that's all looking pretty good and likely bullish here. Go with the VIX. Check up on our good friend the VIX. So the VIX certainly in the condition that would be required for further equity strength. Still near the low end of its non-trending range. We closed at 12 and change on Friday on the VIX. So again, unless VIX starts breaking out and getting above, our most recent resistance levels. The first one being not quite 16, and then after that it would be just under 17. Unless that happens, we're still in very much a bullish condition for stocks to continue rising. All right. Now October certainly can be a volatile month, but that may not happen until later into October, or may not happen at all. It's certainly not something you can bank on. But that's something to be aware of if we have a big burst and we make some new all-time highs and start slowing down again, and say we're in mid-October. That might be a chance for things to turn a little weak, at least short term. But right now, focus should be on the upside, at least for the time being, as far as the stocks go. VIX, if you just want a little insurance, it's pretty low, close to the low end of its range. If you bought some VIX calls to hedge some long positions, not a terrible place to do that, and not a terrible month to do it in, being that October often has some volatility to it. All right, that should be good for now. Should be a good week. Serial Trader, signing off.